The RBC CEO has come out and said the Canadian banking system is an oligarchy, and we've also got another bank that is severely stressed right now and has just been fined again. So let's get into what is going on here. So Canada's banks under pressure to growing competition in ruthless oligopoly, RBC chief executives say so. Very interesting. And just in case you don't know what that means, even I had to look it up. It's a market structure with a small number of firms, none of which can keep others from having significant influence. So obviously very similar to an oligarchy. So anyway, very interesting stuff. Canada's banks are facing a flurry of competition from each other, a suddenly ruthless oligopoly that is putting unexpected pressure on profit margins, says Royal Bank. Obviously, that doesn't mean good things when you consider the amount of loans being written off now are at highs going back decades, especially at banks like BMO. You've got loan loss provisions that they're beefing up, but are miles away from the loans that are being lost and will be lost. And then you've got them obviously all competing with each other for less and less people in the mortgage market, because the amount of lending that's going on is at one of the lowest levels in the past couple of decades, because the demand is just not there. And we're seeing that in the housing market, as we discussed on Monday too. So the new dynamic is most obvious in the mortgage market, where banks are jockeying to keep or increase their share of customers, some of whom are renewing home loans and looking for the lowest interest rate to ease the shock from rising payments. But it is also playing out in a race to gather deposits, which are typically a cheap base of funding to make those loans, but are costing banks more to attract. So this is interesting, the way that the Globe has actually framed the narrative around this, because this sounds more like distressed banks than it does about them just competing with each other and it just being like competition, essentially. You know, it's just the competition. They just want more market share, especially if they're desperate for those deposits. And obviously we've seen the repo market volumes, which have gone sky high over the past couple of months. And when you put two and two together, it doesn't take a genius to work out that they need that cash. So why do they need that cash infusion in terms of deposits, in terms of going into the retail market? It's because something may be going on at these banks, or one of these banks, or multiple of these banks. We just don't know. Banks are very, very good at hiding things. So they talk about Canada as being an oligopoly. It is a ruthless oligopoly. At the end, ruthlessly competitive, Mr. McKay said. Very interesting that he used that word. I'm sure he's a big fan of the channel. I'm just joking, obviously. And then the Financial Post is coming out here and saying the Bank of Canada could cut rates to 2.5% by next year, economists are saying. So that's very interesting. I mean, I think it could even be more than that next year, because the economy is in such dire strait. I don't see them keeping rates high for much longer. And I think you're going to see the US drastically reducing rates soon as well. So anyway, the Bank of Canada cut interest rates for a third consecutive time by 25 basis points. Obviously, this was weeks ago, leaving its benchmark lending rate at 4.25%. And then they're saying about a cautious approach. It's interesting to think about where rates are going to be next year. Really, it's hard to say. I mean, looking at the yield curve, they're going to be a lot lower than they are right now. And then RBC plans to sit out bank consolidation wave in the US, McKay says. But I want to show you exactly why I think is the root cause that they're doing that. And it's not what they're saying here. Royal Bank of Canada Chief Executive Dave McKay has a list of reasons why he won't be shopping for a bank in the US anytime soon. And I'll give you those reasons right now. TD was just slapped again last week with a 28 million US fine for consumer credit reports. So bank provided inaccurate information about customers' credit to reporting agencies. So TD Bank is not looking in a good position right now. Obviously, they've just been ordered to pay that. And recently, also, they were hit with a $2.6 billion money laundering probe. So TD Bank is just getting absolutely shellacked right now by US regulators. So is it any wonder that you've got RBC coming in and saying, hey, we're going to sit this one out? I think it's more to do with that than anything else. And obviously, if TD's got money laundering issues, RBC is going to have money laundering issues ×2 because they're even bigger than TD Bank. So very interesting. And then going on to more things to do with the economy, tourism takes a hit in the Okanagan region. It's been very slow. And this isn't just a thing that's happening in the Okanagan region, it's happening across Canada. And this comes off the back of, guys, remember earlier this year, the mainstream media was saying how the majority of Canadians plan to stay close to home this year. Obviously, this was released in May after some surveys. So the 2024 Summer Travel Outlook by Deloitte found that 74% of those surveyed plan to stay in Canada, close to their home region on their summer road trip. Many are also looking at a summer road trip as a means to save on expenses. The survey also found that 35% said they won't be traveling at all because they can't afford it, or they would rather use their money for other purposes. So again, that's interesting because then you take a look at what's going on domestically, and actually tourism has gone down domestically. So that says the economy has got a lot worse than since they did that survey, which I'm guessing around April, March time is going to be when it was done. So the Okanagan is a tourist hotspot, but this year has many in the hospitality industry in Kelowna, BC, asking where were all the tourists this season. Recession. It's been down. It's definitely a soft season in terms of tourism, said Andre Thomas, who owns and operates Memphis Blues Barbecue House. Thomas said business has been down by around 15%. So obviously contraction there going on. Not a good sign. It obviously shows you what's going on in the economy. And this is not just something that we're seeing in Canada. You're also seeing this happen in the tourist hotspots in Mexico, which is very, very interesting. So Puerto Vallarta, Mexico, August has marked a concerning turning point for Mexico's major tourist destinations, showing the largest decline in international passenger traffic this year. According to the latest report from the Sustainable Tourism Advanced Research Center, God, that's a mouthful, international passenger traffic at key airports, including Cancun, Puerto Vallarta, and Los Cabos, has contracted by 13.6% compared to the same month in 2023. This decline signals a break in the growth trend that has characterized the early part of this year. So obviously that is showing more of a global economy problem. Obviously the number one tourism visitor in Mexico is US tourists, and that's again showing you how the US economy is breaking down. And obviously the US economy breaking down, as we've seen with the yield curve uninverting, is not going to lead to better things in the economy in Canada. So if you were hoping the economy in Canada was going to improve, well, unfortunately, I've got bad news for you. It looks like it's going to get a lot worse before it gets better. And obviously with this whole thing that we've had go on with tourism, this is discretional spending. People haven't got the money, which shows distress really among the consumers. We're seeing that with defaults, credit card debt, and many other alarming statistics that we've been through, like the Equifax report that we went through last week. And now I just want to show you what David Rosenberg said about the economy here, because very interesting. It's what we've been saying the whole time anyway. The Canadian economy is on very shaky foundation, as absent the population boom, the economy would be contract at a minus 2.4% annual rate. So if you just subtract the population growth in Canada, the economy would be deep into recession territory right now. And it is in reality in recession territory. That short-term growth is not going to amount to anything more than fluffing up the numbers to make the Canadian economy look like it's in recession. So by the time it goes into a technical recession, we will be in a depression. So it's not very good at all when you see all these things going on. And also when you're seeing the bank stress go on at places like TD Bank and places like BMO, where you've also got stuff going on at other banks. You've also got distress that is going on clearly in the repo market right now, and that does not mean good things. It means the banking system is extremely stressed, and obviously that's a given when you consider the consumers are totally screwed right now. Businesses are screwed, and that means you're going to see more layoffs, increasing downward pressure on the economy, and it's not going to lead to good things, unfortunately, guys. So anyway, if you've enjoyed this video, I'd highly recommend that you check out this video here. And if you're looking for a VPN to protect your privacy, you know where to go. Go to expressvpn.com/marketmania, affiliate link in the description. And I will see you in